What's going on, guys? Welcome back. Happy Sunday. So let's take a look at the SPY and the triple Qs. All right, let's take a look at the Elliott wave structure. And we're going to review the bullish and the bearish case. Okay. So before we dive into the analysis, guys, consider subscribing and give this video a thumbs up as it helps the channel grow. You guys already know, right? You've been tracking this with me and following the channel. The high here on the SPY, we've been looking at this as the third wave. Okay, correction into the fourth, and then now post correction 1, 2, and 3. Now the question that I'm trying to answer here and trying to sort of dissect with you guys is if this is in fact the impulsive structure that's going to lead to new all-time highs, or is this rally here a correction of this decline? Okay, before we head on lower, it is likely. So that's why we're here to review, and we're gonna show you guys in just a moment. But let's take a look at the main count, which is our bullish count, and let's review from January. So we have here ABC to the W, WXY to the X, and then we have ABC down to the Y. Okay, guys, so we've been calling this here as the wave 4 completion. Okay, it's pretty much completed because the 38.2% retracement was our support, and also we did not break the low in this wave 2 pullback. Okay, had we broken the low like the Qs did, then the wave 4 will probably be here as we are calling it in the triple Qs, but that is not the case here. So for that reason, we are calling this the wave 2 pullback at the 786 416.86. Now post March 14th low, okay, we have evidence of 5 waves up. Now the question is, to what levels are we expecting a pullback or resistance? Okay, and my assumption or my interpretation of this move is anywhere between the 457 region to the 466. Now I know I can consider this a wide range, but there's evidence in technicals that is showing me and is leading me to believe that the wave 5 is almost completed because we have an ending diagonal, and that is proven and that is supported by our RSI. So we do a quick trend line here, okay, from the low wave 4 to the high here, okay, we see evidence of an ending diagonal. Now, ending diagonals are common in the wave 5. And how can we sustain this situation here? Because we see that on our third wave, right, somewhere here, we got our peak rather, and then we started to show divergence. Okay, we see price action make a high, divergence here, negative divergence or bearish divergence in this time frame at least. Now, I am expecting maybe a push on higher to the 457 before we can roll over. Okay, I'm going to show you guys in this count what levels we need to hold, or what level we need to hold in order for us to consider this to still be valid. Because if we break this level, then the bearish count, which I'm going to show you after I tell you this level, will be at play. So it's obvious, right? The level to be or to hold and defend is the previous wave 1 high. Okay, why is that? Because per Elliott wave guidelines, guys, we have to consider that the wave 4 cannot retrace beyond the territory of wave 1. It can't, I mean, in the closing basis, it doesn't, right? It can't. If we close below it, then it's invalid, and for that reason, discounted as a possibility. Okay, so 440.96 is a must-hold zone. I'm going to repeat this, guys. 446 a must-hold zone in order for this structure to, when we get this pullback, this wave 3 wave pullback, for us to still believe that we are going to see the 5 to the 1. Okay, so that's my assumption here. That is what we're working with. We have been tracking this for some time now, and thus far looking good. Now, rolling over to our old count, which is our bearish count, okay, you know, this is where it becomes a little tricky, because it's not only, I'm going to show you the XOY chart, which is about 12% of the SPY or the S&P, okay, the Spider ETF is 12% weighted, so it plays a big role, the XOY, and the XOY is showing us a bearish count. Okay, I can't dissect the bullish count there just yet. It may be lagging, but for now it's showing a bearish divergence. Actually, let's take a look right now. Okay, the XOY is showing us that post our January highs, we got 1, 2, 3, 4, and 5 to the A, B, C to the B, which is showing the 50% to hold as resistance. Now, this zone is from the high to the low, which is appropriate. If we start seeing a breakdown lower, then it is likely not. I'm waiting this maybe like a 30% chance, right, that this is still the count, guys, and the wave 4 is still ongoing. Now, To give this a bit more of a sort of weighted towards a probable scenario is that the 618 or the 452.09 is a resistance. Now this zone here, you can see that is actually a big resistance area, okay, in the SPY. It was resistance here. Actually, let's pull it all the way back here, because sometimes mixing technicals such as support and resistance with our fib levels, and if they show some sort of confluence with wave count, fib levels, and support and resistance, it becomes that much stronger. So you see here that it is some sort of resistance at this zone. Okay, it was support here, resistance here, support, 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 and now it was resistance. Now the question is, are we going to act it as resistance and head on lower? So the 618, those levels that I just mentioned, and the wave structure in the wave 5 plus the divergence in the RSI, it is a strong case. It's still a strong case, guys. Okay, so we have 5 waves down to the A, 3 waves back up to the B, to the C of B, resistance. Okay, now if we break this A wave, which is the wave 1 in the bullish count, okay, then this is the count. Okay, guys, so just keep that in mind. Over to the Qs. Looking at our bullish count in the Qs. Okay, so from the wave 3, we have our W, ABC to the X. We have an expanding triangle to the wave 4 of Y, Y of 4 rather. All right, so we have the wave 5 here, the wave Y, sorry, at the 618. Then we have 1, 2, 1, 2, 3, 4, 5 to the third. Potentially the wave 4 is completed, or this is the wave A, B, and then the C, okay, lower, and then we get the last leg up. Now, in this case, guys, the zones to hold are the following. The zones to hold is this wave 1 high, because I just you know, as I mentioned in the SPY count, we cannot retrace beyond the territory of wave 1 and close it. Okay, so for that reason, wave 4 should hold this support zone if, guys, if, it's a big if, right? I don't like to be too certain about it, but if this 38.2, 50%, 346, 342 hold, then it is likely that we continue on higher. Okay, guys, over to our bearish count. Let me turn this off and turn this on. So our bearish count is suggesting that it is still possible that this is an ending diagonal. Okay, this is an ending diagonal. The wave 5 of C of B completed, and then we're gonna roll over. It's a very risky play at the zone, right? Because we have very little room for this to unfold as a wave 4 potentially. Okay, very little room to unfold as a wave 4. So if it starts breaking below, then we're starting to look very bearish at that moment. Okay, guys, so this week is very important. Please pay attention to these levels, rewind, review, or jump over to Trending Waves, because we post these charts every single day. And we discuss the levels over at Trending Waves in the Discord group. So I do encourage you to join. So if not, then wait until tomorrow for another update, and I'll see you guys then. Take care.